Joining us now, Tom Lee, Fundstrat Global Advisors, Head of Research, and a CNBC contributor. Once again, Tom, looking at your last couple of appearances, whenever you're, actually it's been a while now, when you're on, I kind of hold my breath after some of your forecasts, because a lot of times I think no way, and then it's always seemed you have not been really wrong yet in any significant way. Do you ever have any trepidation, second thoughts? Do you ever get nervous about any of your calls?
Yeah, all the time, filled with doubts because, you know, the future is very uncertain.
No one can be right off. You're 51%. You're like the best ever in this business. You're still bullish, even though you talk about last week, a little wobble in some stocks. Sell on the news because of China. Now, it looks like a little bit of hawkishness out of Jay Powell. I don't know if that lasts.
Yeah, that's right. I think the market has a lot of walls of worry because we've got the shutdown, we've got China, we got the Fed speak, but the market's been up 6 months in a row now. Only 6 times since 1928 that's happened. So if you look at November, we're up 5 or 6 times. And in 1942, it was flat. So basically, November should be really strong. I think at least 200 points on the S&P. So maybe...
For November.
Yeah, maybe even 250. So maybe we get to 71.
See, that's a call that I just wish you wouldn't make a call like that, right?
Well, you could
250
into 3% if that makes you feel better.
It does make me feel a little bit better because 250 points to say in November, 250 points. You're giving a time and a size. But
maybe we wobble the first couple weeks just to digest all the gains.
Yeah, that's what I saw in your notes. So initially there could be some choppy trading at this point. What's driving everything? There's still, I guess, sentiment is not positive, is it? You mentioned the wall of worry.
Yeah, I mean, if you look at it like AAII, the average sentiment this year is still minus 11.5, like net solidly bearish. That's only happened 3 other times in 35 years, all in the middle of bear markets. So investors feel like it's a bear market, but we're up 17%, which kind of tells me I think there's a big performance chase into year end. You know, over 80% of fund managers are missing their benchmark this year. Wow.
And you don't care about not having government data because does the market ever really wait for government data? Or it sort of sniffs it out, doesn't it?
Yeah.
The all-knowing market.
That's right, because, you know, we have good Fed futures to look at what's implied for inflation. You know, the Fed looks at the bond market. The bond market figures things out before the data comes out. I do think the inflation is probably falling a lot faster than everyone expects. I mean, you can look at truflation, and we're down to sub 2% inflation, excluding housing.
Shelter, yeah.
Yeah, and shelter is finally cracked.
Yeah. Because that CPI number was, it was just barely cooler than expected, wasn't it?
Yes, but the shelter piece is now at 0.16 month over month. That's at 2% year over year. That level would bring core inflation down sharply. And over 54% of the CPI components are now deflating. It's the highest percentage since COVID started.
It seems, Tom, that the markets have, largely because of what you're describing, moved on from the inflation watch.
Yeah.
They've kind of put that aside as maybe the forefront risk, and much like the Fed has been dragged to doing, wondering about downside risk to growth. I mean, if you just look at things like the reaction of home builder stocks, consumer cyclicals, regional banks, just to that hawkish cut by Powell last week, it seems like it's not hard to get the market a little bit uneasy about, you know, just exactly what kind of a soft patch this is, even if we have confidence that maybe it firms up into next year. So how does that play into the overall action in the index and what you expect from the market?
Yeah, I mean, I think there is something the market's trying to figure out, which is AI is consuming jobs, but that's turning it into profits for corporates. So like profits are expanding. And then we have profit margins have actually been going up in the middle of tariffs. So how are companies able to take 70% of the tariff hit, but margins are going up? So there must be a productivity boom somewhere. And then we have, like you said, $7 trillion of cash on the sidelines, but we have high rates. And so the Fed, I kind of think, is trying to not overheat the economy, but we know that you just point out, like, housing's in big trouble. So I would say it makes sense if inflation's in a good place and jobs aren't really strengthening for cuts to happen, and that would be really dovish. So I think that sort of comes together before the end of the year.
Andrew.
Hey, Tom. Have you been reading all these stories that just been out, recently here about how the the Fed is doing all of this sort of repo activity, like a lot of repo activity. And I just wonder what that really means for both the markets and maybe even for crypto. I mean, this is a ton of money. I mean, it looks like something like $30 billion just to ease liquidity concerns. This is, past couple of days kind of thing.
Yeah, it is pretty typical into month end, right? That's what we are seeing. And I think that some of these numbers are also being distorted because of the government shutdown. So we know that the Treasury reserves are building because there aren't any payments being made. So it is something we're watching. But if I was to say that there's signs of bank stress, I'd also be looking for high yield spreads to be widening. And those are actually staying pretty calm.
So you figure no problem with 7,000 by the end of the year, more likely something even above that, in your view? Like what? Like 7,300?
Yeah, I mean, maybe 7,300, 7,500.
7,500.
Yeah, so we still, in December, we would build on those November gains.
See, Santoli's like, no way.
No, I don't say no way. I'm open-minded to how far bull markets can go, right? Strong years end strong. We all know about that. The one piece of it I think it's worth kind of struggling with a little bit, though, Tom, is you can look at the AAI surveys, kind of what people are saying, and then you see, equity exposures in, Bank of America private client accounts are basically at their highs, right? So people have kind of, in aggregate, been riding this to some degree. And then you see a lot of what we've talked about in the last several months of, this kind of upwelling of speculative action in non-profitable tech stocks, low-quality equities leading. That's not the Mag 7. That's like a lot of other marginal stuff. So how do you jibe that with that sense that people are still skeptical?
Yeah, I mean, one, we know there must be skepticism because if people were bullish, the institutional fund managers should have better performance. But as you know, this is one of the worst years for fund managers in almost 30 years. I think that there is also kind of problems in private markets. So I think private credit is doing terribly, and I think a lot of LPs in alternative funds, whether it's venture or private equity, are pretty disappointed by the returns, like the 5 years into now. But the stock market's done well. So I think that there is bearishness because like private equity hasn't come through and fund managers are doing badly. But you're right, the ones who stuck with public stocks are doing well.
I want you to quit while you're ahead, but I have to ask you about Bitcoin. I mean, you want to go out on a limb there too? Because it's weak again today, 107. Go below 100 or no?
Well, Bitcoin, I mean, if I look at everything since October 10th, because that was the biggest liquidation in the history of crypto, like bigger than FTX.
Like a margin call almost.
Yeah, it was like almost a miniature rupture, like a tsunami. We're only a couple weeks from that, so I think the market is consolidating. But if I look at fundamentals, like Ethereum, stablecoin volumes have been exploding, application revenues at all-time highs. So right now, fundamentals are leading price in crypto. So I think eventually we consolidate and then we rally into year end.
Where, 150?
Yeah, I think we could still get to 150, 200 for Bitcoin, and then something like 7,000 for Ethereum.